talk about a number of things. What does Halloween have to do with the mortgage industry? We're going to explain that to you. The sneaky little tricks that new home builders are up to right now and how that affects what you're doing and what your clients are doing. And frankly, some of the messaging that you need to get out to your referral partners as real estate agents and your past consumer database. We're going to talk about that. But let's start off immediately with a couple of other things. So I'm going to jump over right now and start sharing my screen. Here's the first one. And guys, I cannot underestimate how important this is to what's taking place in the mortgage space. Because where there is fire, there's generally smoke. So the Chase CEO, his name is Jamie Dimon. He says that, he said a quiet part out loud. This is why people are defaulting on auto loans. Why are we talking about auto loans? Because as auto loans go, so does the rest of the industry. People are going to let all their other bills go before they let their housing expense go. Auto loans are having a big problem right now. And as a result of this, Tricolor Holdings has filed for bankruptcy. First Brands also went bankrupt, and we're seeing a lot of those who are supplying auto loans right now. They're struggling as much, if not more, than we are in the mortgage and real estate industry. Frankly, they are now. So Jamie Dimon, he cautioned that everyone should be forewarned of these bankruptcies. It seems like a dismissive statement of what he said, but there really is a lot of meat on this bone. I want you to check this out, guys. This is interesting. Speaking to analysts, Dimon remarked, "My antenna goes up when things like this happen." Those would be the bankruptcies. He probably shouldn't say this, but when you see one cockroach, there are probably more. That's the sound of a CEO right now who is stressed out. Why is he stressed out? Well, because these companies who are going bankrupt, who do you think is providing them with their warehouse lines? It's the likes of Chase. So who's the one who's ultimately carrying the burden of all these repossessions that are taking place? Dimon goes on to say that there clearly was, in his opinion, fraud involved in a bunch of these loans that were done. But that doesn't mean that we can't improve on our procedures. Now, Jamie Dimon has been the CEO for Chase for decades. I've got to imagine he's gone through his procedures in the past. What really strikes me with this statement is the term fraud. Whenever we see a downturn in the economy, and we do have a downturn in the economy right now, these words always get bantered around. It's coming up in cars, and you can bet your bottom dollar it's happening in mortgages as well. That is, if we were to start to see foreclosures increase above and beyond the pale where they're currently at. Dimon goes on to say that we've had a benign credit environment for so long that I think that you may see credit in other places deteriorating a little bit more than people think. In fact, there is a downturn. Where are those other areas where we're going to see credit deteriorating? Anyone? That's right. It's in the housing space. Dimon goes on to say that we've had a credit bull market now for the better part of what? Since 2010 to 2012? That's like 14 years. There are early signs that there might be some excesses out there because of it. If we have a downturn, you're going to see quite a bit more credit issues coming up. Translation? Credit issues coming up are going to be a major factor. Want to share this here with you guys as well. All right, Halloween is upon us right now, and we talked about this. Would it surprise you to find out that those who make Hershey's, Reese's, and Kit Kat, well, that company is going bankrupt. They filed for Chapter 11 bankruptcy. You would think right now would be the one time they wouldn't file for bankruptcy. Why is this? Because people are pulling back on anything that is considered discretionary spending. I got to tell you, when we look at inflation and it trickles all the way down to candy on Halloween, we're in a recession. Now, whenever you hear the term recession, you do understand that we don't know that we're in a recession until after the fact. We always learn about it 6-12 months later. Well, in 6 months from now, they're going to say back in October, we were knee-deep in a recession and it's only going to get worse. Okay, let's talk about this one. The Trump administration says they're not going to use any contingency funds to pay November's food stamps benefits. Why is this important, and what the heck does this have to do with housing? Well, it's very simple. If somebody can't afford food, they got brothers, sisters, aunts, uncles, moms, dads, grandmas, grandpas. Who do you think's going to be helping folks out? And we have a full almost 10% of people who are in this country right now who are on food stamps. Well, who's going to be paying those grocery bills? It's going to be those who could potentially be your clients going forward. And if I have to pay for my brother and his family to eat, and I've only got so much disposable income, now I got to go spend more money on candy. Well, I'm not doing that right now. That's why they're going bankrupt. And I got to go ahead and pay my car payment, which people aren't paying. That's why they're going bankrupt right now. And I am stressed out financially. Maybe I'm not buying that house. So when we hear that the Trump administration is not going to use contingency funds to pay November's food stamps, is this going to be a problem? Is it huge? No, it's not huge. But again, it's another canary in the coal mine when it pertains to housing. Because every time I pull out my, as my grandfather would say, my billfold, and I spend money, that means I can't spend money on something else. That means perhaps I take that house that I'm going to purchase and I put it on hold until after the holiday season. I've always done good with my mortgage origination business during the holiday season. This might be the one year where things tighten up a little bit, but with rates going down, inventory going up, prices going down, you never know. I'll tell you this, the astute loan officer who knows how to use their phone is going to make it through this stuff. Okay, here's the other thing. We talked about this. We have Fannie, Freddie, and Ginnie who are now starting to foreclose on more properties. We're seeing our foreclosures going up even though they're still near historic lows. But what do we see here? And this is kind of interesting. We all know this, but it's worth looking at. How many people have mortgage-free homes? Who has the mortgage-free homes? Pretty simple. If you are 55 or older, you are a full 3/4 of the homes that are owned free and clear. If you're 75 or older, 26% of all homes that are free and clear are of the age 75 and older. 65 to 74, 28%, and 55 to 64 is 21%. These numbers are huge. Okay, new homes. How Pulte Group's Q3 2025 backlog and orders compare to the past third quarters. So right now, what this really tells us, when you look at those gold lines, that's the backlog of properties that we need to build. That the navy blue line is the net new orders. So here's what this really tells me. This tells me that we still are, even though we've got inventory that we have not seen for years, it's not moving as it should be moving, and we still have a backlog of properties that need to be built for our current population base that we have in this country. Look at this, our Pulte quarterly cancellation rate. Back in 2007, they had a 44% cancellation rate. Our mortgage rate shot, that's when the Fed was like, we took our Fed fund rate from at or near zero, to 5.5%, 6%. And of course, we saw the mortgage market and mortgage-backed securities kind of follow suit. We went from 3% to 6% overnight, and people said, I'm not buying houses here. So we saw that during COVID. That's kind of self-explanatory. We saw this when we saw our rates go up significantly in the third quarter of 2022. And right now we're starting to face a third wave of cancellations. So we have the third quarter of 2025. We're going into what is a very difficult holiday season, fourth quarter, to really kind of explain. We don't know which direction this is going to go. And all of our regular indicators are not giving us the answers that are reliable. But my thinking is we're going to see Q4 of 2025, and we're going to see that cancellation rate go through the roof. Listen, guys, it's Monday. Behind the eight ball, like I said, I have a lot of calls that came in today. I will get back with you. If you have any questions, comments, of course, put them down below. I can't wait to hear from you because I find a ton of inspiration from all of you out there everywhere. With that said, my name is Brian Stevens. I'm over here with Mortgage Shots, and I look forward to talking with you guys soon. Hey, guys, Brian Stevens here with Mortgage Shots in the National Real Estate Post. Hope you guys are all having a great Monday. Great week last week. It was killer. Things are kind of turning around right now for a lot of loan officers, a lot of realtors out there. And listen, my phone has been blowing up as of late, so if you have reached out to me, and feel free to do it, here's my number, 707-330-1272. My name is Brian Stevens. If you want to talk about being a part of our marketing team as a mortgage loan officer, sell better interest rates with a better tech stack, and crowdsource all the solutions to the problems that we're facing, you want to be part of my team. Listen, I don't have all the answers. I might have some, but I got news for you. You have answers that I don't have. So when we put our heads together, we all win. So imagine a world of loan officers all across the country, crowdsourcing solutions. That's what we do, and we've been doing it longer than anybody. And by the way, all of our loan officers are producing, selling better rates, better tech stack. Reach out to me. Again, here's my phone number.